I often talk about the quote, history doesn't repeat, but it rhymes. While every Bitcoin cycle has certainly had its share of firsts, its big new developments, and of course the black swans, the overall trajectory of Bitcoin has remained the same, up and to the right, but in stair stepping 4-year cycles. Nobody can tell you what Bitcoin will do on any particular day, but I feel confident that not only are we in the part of the cycle that provides you the biggest opportunity, but without a doubt, this is the part where strong hands are forged.
This podcast is for information and entertainment purposes only. Nothing on this podcast should be construed as financial advice. All views expressed on this podcast are solely the opinions of the host and/or any guests that we might have from time to time. Nothing on this podcast should be construed as a specific inducement to make a particular investment or to follow a particular investing strategy.
Hello, Sat Stackers, and welcome to episode 273 of the Bitcoin Bulletin Podcast. I am your host, Chris, and as usual, I'm coming to you from the Bitcoin Bulletin studio on Florida's beautiful Space Coast. And it was another glorious day. The sun was shining. The haters have mostly forgotten about Bitcoin as they're often distracted by the newest shiny thing. And as is often the case during the bear market, Bitcoin's network effect continues to grow, unburdened by the propaganda that rolls out, the hardest anyway, when the price is soaring. Of course, to top it all off, we are able to build our stack at a significant discount today, which is why this is referred to as the accumulation phase. But before we dive headlong into all of that and, of course, make our weekly DCA stack, let's take a moment to lead off with our customary look at Bitcoin's vital statistics. At the time of this recording, Bitcoin is at a block height of 954,145 and ringing in at a US dollar price of $64,090. That is, well, that's actually up about $3,000 from last DCA Wednesday, which means that we will receive 1,560 Satoshis for every dollar that we do convert into Bitcoin today. And that is pretty incredible when you consider that at Bitcoin's all-time high, we were able to buy less than 800 Satoshis per dollar. And of course, when Bitcoin goes on to hit $1 million, you'll only be able to purchase 100 Satoshis per dollar. And then ultimately, when we hit 100 million US dollars, that's dollar sat parity. But by that point, it's going to be pretty hard to find someone willing to trade paper dollars for Bitcoin anyway. So I digress. Bitcoin's current price means that we have a market cap of 1.29 trillion US dollars. That makes Bitcoin the 15th largest asset by market cap, which is still not too shabby. I mean, putting that into perspective, that is right behind Meta, which is Facebook, at $1.44 trillion, and ahead of behemoths like Berkshire Hathaway at their $1.059 trillion market cap, and even pharmaceutical giant Eli Lilly at their $99 billion market cap, and of course, way ahead of Jamie Dimon's JP Morgan Chase Bank with their $893 billion market cap. So, of course, dominating the TradFi market news this week, as far as market cap is concerned, etc., was the SpaceX IPO, with the formerly privately held rocket company blasting off to a whopping $2.527 trillion market cap, which puts it into 8th place right behind Amazon. I think it was Trading Spaces with Amazon because I saw a couple times where that was actually the headline in the last day or two. But think about that. In the blink of an eye, with the flip of a switch or the ring of a bell, as far as Wall Street's concerned, normies pumped enough money into buying SpaceX stock that it ended up with a market cap almost 2 times larger than Bitcoin just overnight. Plebs, that alone should show you how early we are. The latest shiny thing, the latest distraction, regardless of how cool SpaceX is, which, by the way, I mean, it's a bet. It's gambling. It's a bet that a company that could go on to do great things, but currently, well, they're losing money. They should have I mean, they should be treated like almost any other company that's losing this kind of money. SpaceX, for example, lost $4.9 billion last year, and it's forecast to lose $17 billion this year. Well, will they eventually be profitable enough to justify not only being the eighth most valuable asset in traditional terms, but a market cap 2 times larger than Bitcoin? I mean, think about that. I talked about this a little bit last week before the IPO, and I said, SpaceX could very well go on to be the most valuable company in the world, but it's not going to go on to be as valuable as all currency of all investments in the world. I mean, if you believe that Bitcoin is money, that Bitcoin will destroy fiat and solve so many of the world's problems, why we say Bitcoin fixes this, it's not going to be even comparable to the stock of any one company. Newt Svanholm famously put it with the title of his book, everything divided by 21 million. And that's literally what we're talking about. We're not talking about an investment. We're not talking about the best company in the world or gold or the best real estate in the world or even all the real estate in the world. We're talking about all the money in the world. In the meantime, though, there are people willing to trade you an entire Bitcoin for just $64,000. And while $64,000 is a lot of money, and even $126,000 when we were at our all-time high is a lot of money, it's nothing compared to where Bitcoin will have to be by necessity if it fulfills its destiny. And I think, I certainly believe it will, and I'm assuming you believe it will as well, since you're listening to Bitcoin podcasts. Gold is currently the traditional asset with the largest market cap at the moment. And again, even gold is a drop in the bucket compared to the total value of all fiat money in circulation. But for those of you who still value your wealth in those shiny yellow rocks, it will currently cost you 15.2 ounces of gold to purchase just 1 Bitcoin. That is more than a half an ounce of gold extra compared to last week, even in the depths of the Bitcoin bear market. Bitcoin, though, with its absolute scarcity, of course, is the ultimate store of value. The things we need to buy every day, and even gold to some extent, are not. I mean, gold has been one of the most scarce assets known to man, and that's why it performs so well. But even gold continues to be produced. There's more gold on the market every day than there was the day before. And so, of course, as more and more money is printed, those necessities and even things like gold get more and more expensive, at least in fiat terms. But getting back to day-to-day items, like your groceries, for example, measured in hard assets, well, it's not the case. They haven't gotten any more expensive. Things haven't gotten more valuable or more expensive. The money you were using to buy them is perpetually worth less and less. I mean, think about it. It still takes the same number of apples to buy a dozen eggs, and a dozen eggs is still worth the same number of slices of bread as it has always been. From time to time, a particular asset might experience inflation that's caused by, a scarcity or a supply shock. But in general, it still takes the same number of cars to buy a house, the same number of, donkeys to buy a car. And since we are Bitcoiners, the staple that we have traditionally followed when it comes to talking about inflation is pizza. And of course, this is because the first ever real world transaction was all the way back in 2010 in May of 2010, when a Florida programmer and Bitcoin enthusiast paid a whopping 10,000 Bitcoin to purchase 2 Papa John's pizzas. So pizza's near and dear to our heart. And while it takes ever more fiat to purchase things you need, one pizza in dollar terms is certainly way more expensive than it was 16 years ago in 2010. Bitcoin, well, that's not the case. 1 Bitcoin, for example, instead of 10,000 Bitcoin to buy 2 pizzas, 1 Bitcoin at this moment would buy you 3,584 large pepperoni pizzas from Papa John's. If you tried to spend 1 Bitcoin's worth of value by buying a pizza a day, every day, that would take you almost 10 years. So while things are getting more and more expensive when it comes to currency, they're obviously getting cheaper and cheaper when it comes to Bitcoin. Pizza included, and even the more scarce things like gold. That metric that has been my absolute favorite to follow the entire history of this podcast is Bitcoin's on-use transaction rate, the 24-hour average transaction rate. And right now, plebs, that's humming. 7.31 transactions per second on average. up from last week's already healthy 6.96 transactions per second and 6 transactions per second the week before that. So certainly an awful lot of on-chain activity when you flash back to when this podcast first started, and we were excited to see more than 3.14 transactions per second. And back then, Lightning wasn't even really a thing yet. Now, of course, the vast majority of monetary transactions when you're buying that pizza or when you're buying your steak burger at Steak and Shake with Bitcoin, well, that isn't even reflected in the on-chain and the number of transactions on-chain because they're happening off-chain on Lightning. So not only is 7.3 bigger than 3.1, it doesn't account for literally millions of dollars worth of commerce that's occurring every day using Bitcoin. But getting back to on-chain activity, the mempools are a little, well, they're telling a conflicted story. Clark Moody runs a traditional mempool, and their mempool is showing fewer transactions than last DCA Wednesday, about half the number of pending transactions, with 3,025 transactions pending in Clark Moody's dashboard's mempool. Of course, mempool.space is the spam-laden mempool. They blew out the default size of their mempool, and they started including the spam transactions that are spending less than the traditional default of 1 sat per VByte for a mining fee. And so not only is their mempool not smaller, not only does it not have fewer transactions pending than last week, they have 14,000 more transactions in their mempool. I mean, that's more. There's an increase of 14,000 transactions compared to just 3,000 Bitcoin transactions, period, in Clark Moody's mempool, with 122,841 transactions in mempool.space's mempool. So it doesn't matter what you think about the Core V30 or the NOTS BIP 110 debate. These numbers, well, take it how you want, but they clearly show two different Bitcoin uses. If you do need to send an on-chain transaction, not put a JPEG or whatever you want to put to memorialize on the blockchain, it's a little bit more expensive this week than it was last week. Currently, both fee estimators I'm looking at are recommending a fee of 3 sats per VByte for a priority transaction. That's a transaction you want confirmed in the very next block. But still, even at 3 sats per VByte, and there's been plenty of times when we've seen this as low as just 1 sat per VByte, that works out to just 23 cents when you take into account the data size of the average on-chain transaction, and you multiply that by 1 sat per VByte, and then divide that by the exchange rate, and 23 cents to wield the most powerful financial technology ever envisioned. That's still really incredible. I mean, thinking back to 2017, where I tried to make a Bitcoin transaction, and I gave up when it was looking like I was going to have to spend more than $50 just in mining fees to move that Bitcoin. Glad I didn't, because Bitcoin is ringing in at about $16,000 at the time, and here it is, dramatically more valuable than that. So worked out for me, I guess. Since the last Bitcoin Bulletin podcast, there was an adjustment in the difficulty that it takes to mine a block of Bitcoin, and it was a big decrease. It got 10.1% easier to mine Bitcoin, and that was the result of a little bit of a pullback in network hash rate. But that's one of the more genius things about the Bitcoin protocol. As I say, over and over again, Satoshi literally thought of everything. And one of the things he thought about was, how do I keep blocks coming in at a standard once every 10 minutes? And how he chose to do that was by making it more or less difficult to mine Bitcoin. Just like the price of Bitcoin, traditionally, it's gotten more and more difficult. For example, when Satoshi first released Bitcoin, you could mine it on your laptop in your dorm room. And now it takes specialized equipment, to mine any Bitcoin, even in a pool, let alone find a solo block, unless you get really, really, really lucky, akin to winning the Powerball 10 times over. But the fact of the matter is, if blocks are coming in too fast, and that's what happens when additional hash rate is put on the network, then it gets a little harder to mine Bitcoin. And when blocks are coming in too slow, which happens from time to time when there's a pullback in hash rate, then it gets a little bit easier to keep those blocks coming in on average of once every 10 minutes. That decision is made automatically by Bitcoin once every 2016 blocks. Again, Bitcoin doesn't care about human time. It cares about blocks. But 2016 blocks, when you divide that by 1 block every 10 minutes, works out to about once every 2 weeks. So we are now about 10 days away from the next difficulty adjustment. It's going to occur in 1,439 blocks, probably on June 28th. And, we're only a week or so into this difficulty epoch, only uh, of the 2016 blocks till the decision is made, 1,439 still remain. So too early to tell, and as a result, the estimators of what's going to happen are telling conflicting stories. One source looks like it's going to be another moderate decrease, and another looks like it's going to reclaim some of the difficulty they gave up with as much as a 2.6% increase. Only time will tell, but the reason why we're potentially looking at an increase is because, well, blocks are coming in fast. During the first part of this difficulty epoch, since the last difficulty adjustment, blocks, although it's only been a few of them, have been averaging 9 minutes and 44 seconds. So obviously, if that continues to be the case, then Bitcoin will adjust its difficulty to slow them down a little bit. Bitcoin's hash rate is currently estimated to be about 965 exahashes, which is really incredibly strong considering that's more than 10x the amount of computing power that was on the network just, well, almost 5 years ago when we did the very first Bitcoin Bulletin podcast, because just like the price of Bitcoin exploded up and to the right, the amount of computing power dedicated to securing the network, as I said, has exploded as well. Of course, that's down from the terahash that we had at the peak of the mining euphoria when Bitcoin was setting those new all-time highs. But if you're the average pleb, all you need to know is that there is a boatload of computing power securing the Bitcoin network, preventing double spends, preventing chain rewrites, etc. And that is pretty incredible. All right, on to the news. It seems like the news when it comes to Bitcoin, or at least what people want to talk about, is Bitcoin's price. And I'm not really going to talk as much about price today as we do from time to time. When I first started this podcast, I tried to avoid talking about price at all costs because, anything below hyper Bitcoinization and price is irrelevant. It's just a random number on the way to everything divided by 21 million. But, it's what most people come to Bitcoin. Now the Bitcoin is a little bit more mature. When Bitcoin was just a pet project and only a few computer science, types were playing with Bitcoin, cryptographers, price was something that they didn't even initially think about. But now what gets people's attention for the first time is usually the price. And maybe it's not the first time they've heard about Bitcoin, but they've heard about Bitcoin. They blew it off. Bitcoin died again, one of the hundreds of times that Bitcoin's been written off as dead. And then the price booms again, and they realize, hey, Bitcoin didn't die. And that, what I think is in large part responsible for the 4-year halving cycles, not necessarily the supply shock as much as supply and demand does play a major price in price discovery, but human nature. The fact that people forget about Bitcoin and then all of a sudden it's in the news again and it's way more valuable than the last time they heard about it. And I think that's what triggers the hype. But getting back to actual news, and again, this is even kind of news that shouldn't be the case, and maybe this won't be something we'll ever be talking about again when well, certainly won't when Bitcoin becomes the global reserve currency. But here in the United States, it seems that the markets, at least for the last few years, have been living and dying based on what the chairman of the Fed says at the FOMC meetings. And today was one of those meetings. And today, the Fed, with the new Fed chairman, announced that once again, they are holding interest rates steady. The cost to borrow the money that is they print for free is being held steady. Well, that was largely expected, although there was hope that we would see either a rate cut or the rate being held steady for the long term. That apparently wasn't the case. I think it was it was one of those things where in this case it was more than just what color tie was the Fed chairman wearing. Was he wearing a tie that was hawkish or a tie that was dovish? In this case, at least according to the Yahoo Finance headline from a couple hours ago, more Fed officials see a rate hike ahead. Half of the committee officials penciled in a rate hike this year in what was Kevin Warsh's first decision as Fed chairman. So that news apparently was disquieting to TradFi, and it sent stocks lower, at least some of them, in the last couple hours of trading anyway. Traditional trading ended at 4 o'clock in the afternoon. And the price of Bitcoin, when the price of stocks started pulling back, seemed to pull back as well. I mean, Bitcoin was it was as high as 66,000 the other day. It was 65,656 last night. I noticed because that was a palindrome, so it stuck in my head like a lawn dart. But nonetheless, normies got a little scared because, oh no, it might get more expensive to borrow fake money. You know what, though? That's okay, because the cheaper the US dollar price of Bitcoin is, the more Satoshis we're going to get. The more Satoshis we're going to be able to add to our stack. If Bitcoin was still over $66,000, we'd get fewer sats later in this podcast when we do our weekly DCA purchase. So in the meantime, of course, all of this is nothing but monetary theater. And in the long run, Bitcoin, with its absolutely fixed monetary policy, that's one of the major reasons it's going to replace fiat as the global reserve currency. And this game of people being able to print money out of thin air and then invent an interest rate to charge you when they loan it to you for the purchases you need to make, that will be a thing of the past. Bitcoin Boomer, I'm talking about the podcast Bitcoin Boomers. I'm not mocking him for his age. Bitcoin Boomer and part-time gold bug Larry Lepard, he summed up the current state of the monetary clown show in a rather succinct tweet on X this morning when he posted, before the decision was made. In 1 hour and 45 minutes, our monetary bartender gives an update on drink prices, limits, closing time, blood alcohol warnings, etc. What a ridiculous state of affairs that the most important price in capitalism, the price of money itself, which is necessary to allocate capital intelligently, is set by one man and his committee. We claim free market capitalism and then price fix the price of money. Couldn't have put it better myself, Larry. Speaking of clown world, the cause of last cycle's price crash, as you remember, well, it was a lot of things, but ultimately it culminated with that big final leg down when FTX collapsed. Well, Sam Bankman-Fried, or Scam Bankman-Fried, who a lot of people like to refer to him as, well, he's apparently in the middle of a big attempt at rehabilitating his image and rewriting history in a big way while he begs for a presidential pardon. And along those lines, he was the subject of a fluff piece in Forbes today, claiming that Sam Bankman-Fried's venture bets would have made him $100 billion richer had he stayed out of prison. Completely forgetting the fact that he was stealing money, that his bets were, as Caitlin Long, the Wyoming native and head of the first fully reserved bank, put when she responded, she quote tweeted that Forbes article and said, "This headline is misleading. Sam funded those bets with stolen customer money, and he was validly convicted of his crimes. That his bets paid off does not excuse the underlying crime. His PR campaign is nauseating." And it is. And I have faith that it will fail. I like to say that time wounds all heals, kind of a pun on the time heals all wounds saying. Anyway, every cycle has had its villain. And while the 2022 year certainly had more than one, well, the pudgy, effective altruist, he obviously was the undisputed king. Last week was BTC Prague. Plebs, that's one of my major bucket list items. I don't go to a lot of Bitcoin conferences. I prefer to go to meetups, meet plebs one-on-one. I have big issues with the Bitcoin conference. The Bitcoin Magazine conference is put on in Las Vegas every year, which is the fiat capital of the world. We talk about, normies, they're gambling on altcoins, and that's the exact antithesis of the Bitcoiner mindset. So why you would hold it in the gambling mecca, that's just a tangent. But either way, at BTC Prague, there was a little bit of a brouhaha, dust up between Jack Mallers and Michael Saylor, a lot of which occurred behind the scenes. But without getting into the dirty details, Saylor, well, he was a keynote speaker at the conference, and Mallers later took him to task for some of the math that comes to strategy and what he says are evolving metrics for his company that at times appear to conflict. Anyway, without getting into the weeds on that, today Sailor, well, he tweeted a link to his presentation in Prague, but it wasn't the subject matter. It wasn't the presentation. It was the way he introduced the clip that I actually thought was pretty profound. He led off his tweet by saying, "The hardest thing in business is not seeing the future. It is surviving long enough to build it." That's kind of like the my feelings on SpaceX. Elon, I think he has a wonderful idea and he's been really good at pulling off some incredible technological advances. And, he could go on to colonizing the universe, colonizing Mars and then sending humans out into the universe, giving us that actual science fiction future, the Star Trek, Star Wars future, whatever it turns out to be, if he can survive long enough to do it. I talked last episode how with the change of the presidential administration, if we go from Republican to Democrat, well, he's persona non grata with Democrat and with the Democrats right now. And they hate him, especially after Doge, right? Not the coin, but the attempt at cutting costs with the U.S. government. But the point being, if the Democrats were to take over and Elizabeth Warren were to be and Treasury Secretary and whoever the Democrat president would appoint the head of NASA, well, Musk's strategy he's spending his money, but it relies on government contracts, launching astronauts to the International Space Station, et cetera. He's launching a lot of Starlink satellites, but he's his own customer in that case. He needs to have an actual paying customer to keep building. And that could come crashing down, with just the outcome of one election. So who knows? And I'm getting off on a tangent, but that's kind of the sort of thing Michael Saylor was saying. You can be the greatest, most visionary genius in history, but if you can't live long enough to build it out, you'll never see that happen. But this also applies to Bitcoin. It's particularly insightful, at least as far as hodling is concerned. And I think that's kind of what I wanted to make the overarching theme of today's podcast, was that there's a lot of distractions that come along. I spoke a lot about that last week. I'm going to get into a little bit more, the shiny new thing that comes along and distracts hodlers, or prevents people from buying into Bitcoin in the first place, in addition to the FUD, what have you. But whether you're a Bitcoiner or not, we've all had that moment where, man, we should have bought Bitcoin the first time we heard of it, but we didn't. We were distracted by whatever that latest shiny thing was. Anyway, I'm going to get into that in more in just a minute, but I want to continue with Michael Saylor for just a second. Last week, we mentioned that Saylor had resumed Strategy's Bitcoin buying streak after, remember, they shook the markets with a sale of just 32 Bitcoin. They own over 840,000 Bitcoin, and they sold 32, and people panicked. But he got back to his buying streak last week, and then Monday, just a couple of days ago, Saylor announced that Strategy had made another big Bitcoin purchase, tweeting, "Strategy acquired 1,587 Bitcoin for $100 million to increase our Bitcoin reserve to 846,842 Bitcoin. We've also increased our US dollar reserve by 100 million to 1.1 billion." So Saylor back to stacking. And by the way, he stacked 37 more Bitcoin this week than he did last week. That was despite the fact that he spent $1 million less to do so. So Strategy taking full advantage of Bitcoin's almost 50% off sale and doing what it takes to lower their dollar cost average, or their average cost basis as well. But getting back to my theme from last episode, that I was talking about how where people were saying that we didn't really get a euphoria phase, that it was, a most boring bull run ever. And I said we actually did have a euphoria phase, but it was diverted into paper Bitcoin summer. Remember, people were buying Misty and the ETFs and et cetera. Well, Saylor also tweeted about his paper Bitcoin products today, announcing Stretch, STRC, now pays dividends twice a month. What is the clearest way to describe this? With a poll about whether it should be called twice monthly, semi-monthly, 24 annually, or 2 dividends a month. And that's really neither here nor there. But this leads into that pet peeve of mine, particularly with Bitcoin influencers. I don't like to call myself an influencer. I host a podcast. I like to think of myself as more of an educator, or at least an encourager. One of my favorite podcasts back in the day was Adam Meister, his One Bitcoin show. And the reason I liked it so much was because he was just so upbeat. He just he cut through the crap. He didn't fixate on the latest shiny thing. He just said, hey, things like his catchphrase, like, strong hands, Bitcoin always returns to its all-time high. We're one day closer to an all-time high, etc. So I'd like to think that my podcast is more uh, like a church sermon. You go to church and you walk away feeling inspired. And I'd like to think that my podcast is more about inspiration than information. Although I like it to be an educational podcast as well. But the point being, there are a number of Bitcoin influencers, some of them with very large audiences and podcasts, that have been displaying a pretty shitcoiner mentality recently. Again, I don't want to call anyone out. Last week, I didn't call anyone out, but I had one very specific Bitcoin podcast host in mind when I was railing on about this. And he's not alone. And that is the reason why I'm annoyed by it all. If it was just one person, I'd just mute him. I would consider it a one-off. But so many of the Bitcoin podcasts right now, by people that propose to be, they're self-professed to be Bitcoin maxis, including one particular podcast host that I've got in my mind right now. Well, they've spent an awful lot of time hyping the paper Bitcoin products, as opposed to supporting the underlying asset, as opposed to saying, keep those strong hands, keep your conviction, like Adam Meister says, or instead of saying, hey, we're going to build that stack every week like we do here on this podcast. Again, this one podcast host, and I like the guy, so I don't want to dog on him. I actually feel like this makes me a bad person in a way to do so, but it's just so frustrating, and I think he's doing such a disservice because, first he was hyping buying MSTR stack because you could buy MSTR and make a premium over, or maybe what you can make on Bitcoin. And then it was misty with its 100% annual dividend payout at one point in time before it totally collapsed in price. I mean, it's still around, but I think it's worth like $19 a share, and that's even after they did a reverse split. And then of course it was Stretch with their 11.5% dividend. And then most recently, this podcaster was bragging about SpaceX. And of course, he went big into SpaceX, and he's bragging about his gains that he made on his SpaceX shares. Plebs, I'm not going to judge you, and I'm not going to judge even him on your Bitcoin purity. I just like I don't lambaste Larry Lepard for being 50-50 on gold and Bitcoin. Everybody needs to make their own decisions. You need to live your life the way you see fit, and that includes your money, that includes your investments. I'm not saying that everyone needs to be all in on Bitcoin, that you Bitcoin only. I might have my own opinions on whether that's the best strategy or not, but I get it. Especially the younger Bitcoiners, the family out there. I believe Bitcoin's going to have its 4-year cycles, so you're going to need that reserve fund, that emergency fund to have start a family if someone in your family gets sick, etc. So there may be other things besides Bitcoin that you hold on to as well. And hey, I'm not going to judge you for that. My problem is this particular influencer is one of the people that was beating the drum the loudest, saying that the 4-year cycle is dead because this was the most boring bull run over. Not dead as in we got hyper Bitcoinization, dead as in Bitcoin flatlined, that it was boring. We didn't have the euphoria phase. All the time, he was one of the people that was diverting attention away from Bitcoin and into paper Bitcoin summer. Remember, we even called it paper, not we as in us. Everybody in the Bitcoin community was calling it paper Bitcoin summer. Personally, I was really pleased with $126,000 Bitcoin. I mean, I'm looking at it from when Bitcoin was worth nothing to the low of last cycle when Bitcoin went under 15,000, and then to rebound all the way to 126,000. That was pretty cool. But I'm also incredibly pleased with the ability to stack more during this discount, because every cycle I have had that nagging doubt, just like the I wish I had bought Bitcoin the first time I heard about it, the I wish I had bought Bitcoin the first time I did buy Bitcoin when it was only worth, less than $1,000. Or I wish I'd bought more Bitcoin last cycle when it crashed down to $15,000. I don't want to be the person that says I wish I bought more Bitcoin at 64,000 or at 61,000 or whatever we go down to during this bear market. So if you think Bitcoin didn't live up, getting back to these influencers, if you think it didn't live up to its potential last bull run, then I think that mentality of getting distracted by the latest shiny thing, That was a big reason why. But even more importantly than that, while we're trying to help grow Bitcoin adoption, pimping these paper Bitcoin products, I think that's just about as sleazy as when Peter McCormack was getting paid to promote BlockFi a cycle before that. Even when he had realized that BlockFi was failing and pulled all of his money out, he was still taking money from BlockFi to brag about earning yield on his Bitcoin, interest on his Bitcoin. And so many people got burned. And think about how many people that got burned, they get burned every crash or burned by every scam, that they nope out and they never come back. I mean, they'll eventually come back when you have no choice, when the dollar doesn't exist anymore. And if you want to go to McDonald's, you got to spend Bitcoin. I mean, they'll come back then, but they'll come back it's of no benefit to them. It will be of a benefit in the terms of that their savings won't be devaluing with, inflation, but they'll have missed out on the gains that they could have made now, getting in while we're so early, getting in while they were even earlier. And it's influencers like this that are helping set people up to get burned like that. And I just think that really sucks. I guess it just comes down to integrity. And I think that's something I expect from people who hold themselves up as Bitcoin educators. Long term, none of this matters. In the grand scheme, there will be hyper Bitcoinization, and it doesn't matter how many cycles it takes to get there, how many scams there were in between. Bitcoin will defeat fiat. I just feel bad that there are undoubtedly people whose future is going to be not as bright as it was going to be, if they weren't steered astray by that kind of thing. All right. Again, I am and I remain incredibly upbeat about all of this. And if you're listening to this podcast, then you probably are as well, because you remember why you're a Bitcoiner. You remember that long term, none of this matters. None of the noise matters. TikTok next block. Bitcoin keeps marching forward. Bitcoin's going to do the same thing to the banks that email did to the fax machine. And Bitcoin is inevitable. Can it help that things, can things help accelerate that, like more friendly government here in the United States and, and more robust institutional adoption? Sure. But in the meantime, in the long term, in the meantime, none of that really matters. Meanwhile, we're still early. There's still people out there who are going to sell us Bitcoin for the paper money that the Federal Reserve prints out of thin air. And speaking of purchasing Bitcoin, it's time to move on to our DCA Wednesday segment. Every Wednesday since we began this podcast, we have had our dollar cost average segment. Not the very first podcast, but the very first Wednesday that rolled around after I started the podcast, because I think our first podcast was actually on a weekend. But we decided that we were going to test out the dollar cost average hypothesis. And dollar cost average, well, it's an investment strategy where you invest your money in equal portions at regular intervals, regardless of price. Not gambling, not trying to time the market, not trying to buy the bottom and sell the top, but just setting it and forgetting it. Setting that equal portion, we chose just $20 US, and we set weekly for our regular interval. These obviously are both you do you things, but I chose $20 a week because, well, I wanted to show that even if you have very modest means, that a very small amount of fiat turned into Bitcoin every week, well, that would eventually add up really fast. And not only would it add up fast, but it would put you way ahead of where the rest of the world will be once we finally get to mass adoption. And of course, I chose weekly because that's a very common investing interval. Most people I know that work in the fiat mines, they get paid once a week, or they get paid every other week on Friday. And then they do whatever investing. They do their entire family budgeting based on their payday. So, it just happens to also work out nicely that I have a weekly Bitcoin podcast. So you do you things, but the point being that you're consistent. You pick a specific amount of money and you don't change that based on how excited or depressed you get about the Bitcoin price. You just buy every time your interval comes around. Well, today will mark our 256th DCA Wednesday. As I mentioned earlier in the podcast, we're rapidly closing in on the 5-year anniversary of our first episode. But we did our first DCA Wednesday episode on Wednesday, July 28th, 2021. on that day, we stacked our very first $20 worth of Bitcoin, and we stacked every Wednesday since then. And leading into today, that means that we have stacked 255 times. 255 times 20 is 5,100. So, when you think about struggling to come up with just $20 to make disappear, to put into Bitcoin and forget about for 4 years, 8 years, 10 years, 5,100 all of a sudden is a much, much bigger number. And, we got there just by being steady. A slow and steady wins the race. We didn't try to be the tortoise. We were the hare. We didn't try to be the hare. We were the tortoise. We started slow with our $20. And you know what? The thing you hear on the news all the time is how the average American here in one of the richest countries in the world, nobody has any savings. They're in debt. They don't even have $500 to cover an emergency. And that's here in the United States. So there are plenty of other countries where the average person is much, much worse off financially. And so just to have already socked away 5,100 US dollars into Bitcoin in the last year, I mean, I think you can appreciate how life-changing that already is. And of course, if $20 is nothing to you and you would laugh at 5,100, poo-poo, that's nothing. Well, maybe you're stacking $10,000 a week. Then you're doing even better because you followed the same trend that we've followed. You just went bigger. So again, those are you do you things, but we spent $20 a week, 255 times, converted 5,100 US dollars into more than 0.1 Bitcoin. There are 100 million Satoshis in every Bitcoin. So we have now stacked 11,908,067 Satoshis. We did so by converting 5,100 US dollars. And even though Bitcoin is in the depths of the bear market, that stack still has a fiat value of $10,169.09. So even while people are talking about getting burned with the metrics show that the average Bitcoin purchaser, they're underwater right now. They spent more on Bitcoin than they have. Well, that's not the case with us. We've almost doubled our money, and we did so by ignoring the price. That's what I think is really cool about dollar cost averaging. We have already grown that stack because a few months ago, I changed from buying $20 live on air every week to setting it and forgetting it even further. The reason I did so is Strike at the time was offering no fees for automated investing, regardless of how little you invest. Other services do that as well. Cash App does that now too. At the time they didn't, which is one of the reasons we changed from Cash App to Strike. Neither of those companies are sponsors of this show. I have no indebtedness to either of them, no reason to promote those services. I just chose Cash App originally because I thought it worked best for my small purchases, even though we were paying a little more than we would be in fees if we had chosen other exchanges. With Strike, we're doing it for no fees, so you can't beat that. Also, these are another one of those you do you things. The important thing is you pick a service or an exchange that, well, first of all, is available where you're at. Cash App and Strike aren't available to everyone in the world. So pick a reputable service where you live that's available to you. But more importantly, once you purchase that Bitcoin, as long as you have enough that it's not going to be eaten up in fees by moving it to your hardware wallet, get that Bitcoin off that exchange because, even if FTX was your exchange of choice last time, as long as you were always taking that Bitcoin and moving it to your cold card or your Ledger, your Trezor, or whatever you're using, it didn't hurt you when FTX collapsed. In fact, it helped you because it knocked the price of Bitcoin down to 15,000 and we could stack even cheaper. Either way, we've already made our purchase. We stacked about an hour ago now. And so our purchase triggered when Bitcoin was trading at a price of $64,166.32. And that meant that our $20, since it all went into Bitcoin, scored us an additional 31,169 Satoshis. Plebs, if you've been listening for a while, remember when we were closer to the all-time high, we were getting less than 20,000 sats for that $20. When I think that the highest we purchased was $122,000, and we purchased for a little over 800 Satoshis per dollar. But those 31,169 sats have grown our stack to 39,232 sats. So unless the price of Bitcoin explodes in the really short term, that means we're only a couple of episodes away from being 0.12 Bitcoin. And that is really cool. Of course, we purchased for higher than our $42,828 average purchase price. So that means our average cost basis went up a skosh. Our average cost basis is now $55 higher. So our average purchase price is now $42,883.83. Still not too shabby, considering that Bitcoin's ringing in at around, what do we say? We just purchased it $64,166.32. But plebs, this show and Bitcoin in general are about having a low time preference. We're not going to fail that marshmallow test. We don't want fast gains. We're not trying to get rich quick. This is about the future. It's about our children's future, our grandchildren's future. So even our humble stack of less than 0.12 Bitcoin, it's only a matter of time before Bitcoin roars back to its all-time high and sets another new all-time high. But on the way, Bitcoin will eventually reclaim 100,000 US dollars. And when it does, our humble stack will have a US dollar value of $11,939.23. Again, for just 5,120 US dollars converted into Bitcoin. Standard Chartered has made a bunch of big Bitcoin predictions, and their original prediction was that Bitcoin would end 2026 at $200,000. They've revised that down a bit, but the point being, $200,000 is most likely in the cards in the not too distant future, in the grander scheme of things. When Standard Charter's prediction comes true, whether it's by the end of this year or whether it takes a little longer, our humble stack, just $5,120 with a fiat previously, would have a US dollar value of $23,878.46. Of course, for a lot of people right now, the moon is $1 million. Just like the moon was $100,000 for people in 2020. I mean, the 2017, $100,000 was the pipe dream, and we blew right past that this cycle. Now that pipe dream is $1 million for a lot of people. Well, when Bitcoin does hit 1 million, and plebs, it's got to go way past 1 million just to become the digital equivalent of gold, let alone becoming the global reserve currency. But when it does blow past 1 million, our humble stack, even if we didn't add another single sat, would have a staggering $119,392.32 value. Of course, Adam Back, who invented proof of work, he's cited in the white paper for his contribution. He estimated that by the year 2032, so 2 more halvings from now, Bitcoin will be worth $10 million a coin. In my opinion, that is easily possible. I mean, I think it could happen sooner. Maybe it takes longer. Who knows? But it's definitely on the path to hyper-Bitcoinization. When it does, our humble stack that we purchased for just 5,120 US dollars will be worth $1,193,923.20. But, Adam Back was, a cypherpunk who was trying to invent, he was his research is part of inventing Bitcoin, has a big stack of Bitcoin himself. Obviously, he's biased. So if you don't trust his opinion, well, let's look at the TradFi world. Who can forget when Fidelity, one of the largest investment companies in the world, well, in 2022, they predicted that by the year 2038, one Bitcoin will be worth 1 billion US dollars. Well, that's well on its way to hyper-Bitcoinization, but it's not an unreasonable figure. Again, whether it happens in 2038 or whether it doesn't happen for 100 years. We're talking about long-term thinking here. We're talking about building generational wealth for our grandchildren. At some point in time, one of my relatives, one of my offspring, my heirs, will see that happen. And when they do, this humble stack will be worth $119,392,320 US dollars. That will change the lives of my family members forever. Maybe if you're Michael Saylor, it's peanuts. But if you're Michael Saylor, you're probably stacking more than $20 a week. In fact, we know he's stacked $100 million this week. The point being, we are still early. We were able to accrue a stack of Bitcoin of 11 million, more than 11 million Bitcoin, when ultimately, when hyper Bitcoinization comes, there are less than 250,000 Satoshis to be divided equally amongst the population of the world. So we're already way ahead of where the average person will ever hope to be able to be. And we did so for just $5,120 and at only $20 a week. Before I wrap, I want to remind you that this is the hard part of being a Bitcoiner. Hodling through the bear market, and more than just hodling, taking advantage of it to build that stack while you can do it at a major discount, that is tough. You know, we always hear about the person that said, I'm going to wait till Bitcoin goes back below 100,000 before I buy. And then they didn't. And then they're like, well, I'll wait till 58K. And when 58,000 comes, if that happens, they're not going to buy either. I mean, it's tough to buy psychologically when the price of Bitcoin is coming down. It's way easier to FOMO in when the price is surging. And that's kind of why a lot of people get burned. And in my experience, this isn't something that gets easier. You know, I've been through several cycles now, and I think quite the opposite. It's harder to watch your family's theoretical paper net worth go through the roof and then come crashing back down when those numbers are larger, you know, than it is when you watch your net worth maybe go from $1,000 to $20,000. I mean, that's a really cool gain, right? 20x. But when it crashes back down to 3, I'm still up $3,000. You know, it's not the end of the world. But for those of you that were millionaires in Bitcoin on paper when we were at the all-time high, to watch that crash back down to where, you know, you're not set for life anymore, well, there's a lot of that lamenting going on online, and I can understand why that gets harder. But Bitcoin, like time itself, well, TikTok next block, it marches on, and before you know it, the next halving will have come and gone. People will be calling you lucky for having had the chance to stack at $64,000. You know, the seasons change. TikTok next block. That halving is coming faster. You know, it's less than 2 years away now, and as I say, it all begins again. When I first started listening to Adam Meister, I just spoke about him a minute ago. I talk about him from time to time. He made a pledge that he was going to hodl until 2020. He wasn't going to sell a single one of his Bitcoin until 2020, and it was a long ways out then. Well, now 2020 is ancient history, right? So it's amazing how fast time goes. And for you younger plebs who are just starting your families, there's something about you know, when you're younger and you're single and you're adventuring the world, that time seems to stand still. The summers when you're a kid, they last forever. As soon as you start a family, you know, you blink, you turn your head, and your kids are graduating from college, or you're retiring. It Time is relentless. It happens fast. So take advantage of these accumulation phases while it's here, because time moves on, and as they say, it all begins again. So bear markets aren't just for hodlers. I mean, they're not just hard for hodlers. They're also hard for podcasters. I've seen it in my stats. I listened to OG Bitcoiners and podcasters Stefan Livera and Daniel Prince lament about this, that when they're in a bear market, their listenership has dropped by more than 50%. But for those of us with conviction, you know, those time-earned strong hands, some people refer to us as the remnant. Well, we're always still here. You know, we're doing the hard work. We're stacking the sats. And you, while you're still here, you can make an outsized impact on the success of this podcast and our ability to help orange pill people by doing just a few simple things. And I would ask you, please make sure that you are following us on every app that you listen to podcasts on. If sometimes you listen on Fountain, make sure you're following us on Fountain. If when you're driving, you listen on Apple Podcasts or Spotify, make sure you're following us there. And remember, make sure you have those automatic downloads enabled, because there's a lot of fuckery going on with the podcast apps. Spotify in my humble opinion, I can only assume this is why they're doing it. They're making it harder and harder for small podcasters. Maybe they're trying to drive us off their platform. I didn't plan on being on Spotify. I started out with Anchor. Anchor got bought by Spotify. Kind of like being traded. If you're, you know, a ball player, you didn't necessarily mean to play for the city you're at. You know, you had a dream team and you just end up where you end up. But one of the things that Apple Podcast does is they they disable automatic downloads from time to time if they think you're not listening to enough of a podcast. So make sure you still have those automatic downloads enabled, and make sure you're still following us on all your favorite podcasts, because like some of my favorite YouTubers, and we have a YouTube channel, but it's just the audio of our podcast. We're primarily a podcast. YouTube's a benefit, but plenty of my favorite YouTubers, they keep asking you to make sure you're subscribed to the podcast, like the podcast, subscribe to the podcast. Even Twitter. I've liked tweets, like posts on X, that I've literally seen my like disappear. The red heart go back to just an empty heart. And I've clicked it again a few minutes later. It's showing I'm not liking it. So there's definitely some fuckery going on out there with big tech. So please do me that favor and make sure you're still subscribed. And also liking and reviewing this episode in the manner that's available on whichever app you're using. That all goes a long way towards bumping this podcast up in their rankings, which it decides whether or not people find out about this podcast when they're looking for Bitcoin content to listen to. Another way that you can help this podcast out is by making sure you're following us on X. I reference X an awful lot on this podcast, but I can see the stats, and we have a lot more viewers than we have followers on X. So please take just a second to click follow on X, where we are at BTC Bulletin Pod. BTC, like short for Bitcoin, Bulletin, because we're the Bitcoin Bulletin Podcast, Pod, that's short for podcast, at BTC Bulletin Pod. Regardless of where you're listening, if you scroll down through the notes, that will be in the links. Of course, listening is the single biggest thing you can do for boosting us in those rankings, so I appreciate your time. I'm glad that you feel that you are getting value from this podcast, whether it's education, entertainment, or that spiritual uplift that I seek when I'm listening to podcasts. But with all that said, we hope to see you next week and every week while we continue to build our shiny orange future together. And in the meantime, keep on stacking those sats, you sexy sat stackers.